you are welcome at the Professional Trainers Academy, a school that trains private candidates which are running secondary sessions or secondary subject in different domains. So today we are going to learn a subject called accounting in general, or what we can call initiation to accounting. Today's subject is called Introduction to Accounting. The first unit on which we are going to start with is General Introduction to Accounting. Before we introduce to this, I would like to let everyone know that whatever happens and affects money across the world has to be recorded. Whether you are paying cash, whether you are receiving cash, just a recognition of an amount of money that is spent or that is being received should be recognized in the form of writing. That's why in defining this word accounting, you are saying that this is, you can say this is accounting. You can say this is a process of recording, classifying, analyzing, summarizing, and interpreting the financial transaction of the business at a given period of time. Just as we are saying, the financial accounting is a process of recording. We are saying it's a process of recording because whatever happens and affects money, it has to be recorded. Therefore, we need to record this transaction, whether we are receiving cash or whether we are paying cash within the business. Another thing, we need to classify. Why do we say we need to classify? In the business, we have different things. We have different assets, expense, income, and liabilities. Therefore, we need to classify in their category. And in fact, we shall see it in other further learning outcomes in different sessions. But we need also to analyze the transaction that are taking place. You cannot record without making such analysis. And we need to make a such sum up, a such summary, a such interpretation needed. Because whatever you record, whatever you have received, you have to record. Therefore, there could be an interpretation about it. And these things are affecting money, of course, within the business at a given period of time. Why are we ending by saying at a given period of time? Because whatever may happen during the January could be different from what is happening during the February, could be different from what is taking place during March, any other month accordingly. That's why we end by saying at a given period of time. Yeah, thank you. From this, we are looking the definition of accounting. On the point 2, they are looking objectives of accounting. Accounting is there to do what? Accounting is having the purpose to act as a tool of control. We are using accounting in making control within the business, within different activities of the business you are working. The second point in such kind of objective, it is there for what? It is there to act as a tool of planning, as a tool to act again as a tool of decision making. We cannot make a decision in the business without relying to the way of finance, in which way we are. Maybe, for instance, making a project of the business. So if it is affecting to look which amount, we need to take a decision, right? We need to look on how much money will we use in this project, about the budget we are using, we are preparing, or any other thing. So whatever decision we are taking, most of the time, it is affecting our financial way. That's why in accounting, the data from accounting are used in decision making. Another point to look, apart from these three, another objective, the fourth one, is there to be used during taxation period. We are using the information from accounting in the taxation period because when the government authorities, when the tax authorities are coming to charge the tax in the form of correction for the tax from the business, we are needing this information from accounting. Why? You know, we shall see the way of determination of the profit, and this profit of the business, they can rely with in charging the tax rate. That's why the tax authorities, when they are coming to collect the tax, they use the information from the accounting. So it is there for having the different purposes in the correction of tax. Not only that, but also to be used in the future borrowings. We are saying future borrowings because the data from the business in the form of accounting, they are there to be presented for any institution in the way of finance. Those financial institutions which can request to have such financial documents in which to show the seriousness of the business, if the business is running smoothly, if the business is having activity which are improving accordingly, and the banks or these financial business, financial transactions are taking place in the business, because if they are recorded well, effectively, they will be presented to the any other way of borrowing. So you can have more and more, but let's see another one. We are using accounting information for the purpose to be used during the business project. Yes, a business might have some different projects, so therefore we are using accounting in the preparation of different things. So to make a review on this, we saw that is a process of recording, classifying, analyzing, and doing different things. They are there to make all these objectives. So thank you. Let's go to another step where we are going to look some more importance of accounting. On the next point is 1.3. Here we are looking at the importance of accounting. Yes, to rely with the set objectives of accounting, we have seen that it is there to act as a tool control. Therefore, there is an importance that is related to the same set objective. Here we say, you can say it helps to act as a tool of control. Not only that, but also its results are used in decision making Third, its results are used in planning and controls in planning and setting business objectives Fourth, its results are used during auditing period again auditing period again its results are used during business borrowings and also apart from business borrowings you can say number 6 its results are used in evaluation of the business performance and so on. So you can say that the accounting is helping for acting as a tool of control. You cannot control without relying on the information obtained, whether the amount of money spent, amount of money received, the control you are doing in your financial business, maybe to look available cash on which you have used for long, for a such period. You can even use this in taking decision about the project you may made, about the decision, about the budget, any other. And these results also coming from accounting are used for making plans, are used for making such objectives set of the business. They are also used for making the audit. Remember, we shall see in some further learning process. When you are making the auditing, you are tracking the information of accounting, and you are looking the fair view and the truthness of the information from the accounting of the business accountant recorded or achieved in such scenario, in such period of time. So therefore, when you are coming to make an audit, you are making this auditing activities through financial information. Another one is that is the results from accounting are used for business borrowings. I told you when we were setting the objectives, we are targeting to make some more financial purposes in the form of getting money from financial institutions so that you can get more finance. Therefore, they cannot give you this information, they give you these loans without relying on the information you have from your finance. And lastly here we have that they are used for the business evaluation performance. When they are making, probably, for instance, they want to track if the business has made the profit made, or maybe they are tracking the loss made. If it happens, for instance, a business can get a loss or a profit. Therefore, if they are tracking this, if they are evaluating the information obtained through the working activity, they are looking all this by the use of the accounting. Therefore, this is the importance of accounting. Let's go to the next point, 1.4. This one is relying on accounting users, or you may say users of accounting information. Or accounting data. They are mainly, these accounting users, they are mainly classified into two. They are classified into two categories. Accounting users are classified into two categories. One, there are those who are internal from the business. They are called internal users. And the other ones, they are called external users. External users of accounting information. So we are going to describe them briefly, one by one, to see their examples which are coming whether internal of the business, whether from external of the business. Let's go with these ones. The internal users and external users. So 1.1, these are internal users. Internal users of accounting information. Let's first see their definition. How are they defined? You are saying internal users of accounting information. These are people who take a part in the learning of the business. You can say these are internal users. When you say internal users, you can say these are people who take a part in the learning of the business. So there are people just who are engaging in the business activity, who are taking care about what is taking place in the business, what is going on, let me say, like that. So they are tracking a day-to-day business activity. They are there to keep an eye on how business is being learned smoothly. Therefore, I would like to mention some examples of them. So, in internal users of business information, we have firstly these shareholders. Can say shareholders. Sometimes we may even call them business owners, or you can even call them stockholders. Those who hold the stock during the business. And someone can even interact saying, when do we use this information? Why do they need this information? The internal users of business information from accounting in the form of shareholders are needing this information on the different ways. Like, for instance, they want to know what is the business profit? Is the business running smoothly? Is the business generating an income? Such kind. Or they made a loss. And when they need this information, they want to look if the business is generating according to what they have invested. Remember, when you have invested, you need to have a return on your investment. If not, nothing to do. You may close your business, right? So they are tracking to see if they made a profit and on which way. Where they can do what? They can even share according to the pro rata basis. This system is called pro rata basis. So it's where you can get this information according to the shareholders. Another one is the employees, workers, laborers. You may even say personnel. These personnel, they need information from accounting when. For instance, they are making self-evaluation. For instance, they are making the evaluation of what they have done. For instance, they need this information to look if their work is being effectively. It depends. Not only that, but also doing the self-evaluation. Other people could be like the internal auditors. Internal auditors. The internal auditor also may need the information accordingly. It depends to what they are tracking. Maybe he or she is doing an auditing activity. Maybe he or she is doing what? Maybe is suggesting where possible, in recommendation on the internal auditor's opinion. It can be where they are making some business workers opportunities, achievement, weaknesses, any other support informal. Remember, an internal auditor is looking like the doctor of the company, right? Yeah. So these are the internal users of accounting information. I think you are aware with it. So we have said these people, they take a part in the learning of the business. So if they are not there, no working of the business, no movement. So we go to the next. Another point is looking about the external users of accounting information. External users of accounting data, accounting information. So by definition, external users of accounting information, simply let me say, these are people who do never take a part in the learning of the business. Means they don't take care, they are not there on daily basis, right? They are just coming for their financial interest as personally as they are. For instance, we're gonna make some examples like creditors, debtors, and so on. So these are people who do never take a part, never take a part in the learning of the business. People who do never. I'm making some negation here to show you that these people are not interested in coming and doing some businesses activities. They are there for their financial interest, nothing else. Together, I think you are following. We are saying people who do never take a part in the learning of the business. You may go to the secondary point saying examples of them. You may highlight examples of them. You know, business have different relationships. Maybe in different corners, some conversation, some deals that a business could deal with. It depends, right? But when we are saying these people who are coming externally from the business, we are looking those who have business relations in the form of, like, for example, we have government or state. You may say government or state. This is interested in the form of maybe government is looking how the business is running effectively. Remember, a business has a very big role to the human being in the same community in which the business is operating its activity. Then the government is coming to see and keeping a track to look how these activities are taking place, maybe for the issue of paying tax. Not only that, but also something like the customers. These customers may need information from financial statement because they need to look their information related. Maybe according to ask the price. Maybe someone is a debtor to you in the form of like debtors. Maybe they want to evaluate their debts, that the business, they owe money to the business. If they owe money to the business, means they need to track and look how much money did they pay, how much money is remaining, how much money are they supposed to pay later, maybe, which appointment they have given to the business, any other kind of the evaluation. And not only that, but also oppositely, the creditors. Creditors. Remember, a business can have credit from different people for different purposes. Not only these people called the suppliers also, they are included, right? Remember, business can be lent from some people, from suppliers, those who supply business. They need to evaluate and look, are these people serious? So that they can pay money to me back. Are they serious or not? If I believe that they're gonna pay, will they pay or not? So these people, suppliers also are there to look what? To look if they can get their money back. Lenders, any other lender, any other person in the form of lender, financial institutions. For instance, some banks, some circles, saving and credit cooperatives, any other. These people coming from outside of the business. Remember, I told you, these are people who do never take a part in the learning of the business. Therefore, if they don't take a part in the learning of the business, these people are coming from external of the business. To end our introduction unity, I would like to mention some basic accounting abbreviation as point 5. Then let's go with point 5. Here we have another point that we can introduce to you in the form of introduction in general to accounting. Some accounting abbreviation. So when you say abbreviation, things on which we are writing in short, you may find someone wrote somewhere in any way. Then you find this notation, what does it mean? So there are some accepted, some on which we are using in our normal notation. We shall see in a different session ahead on which you can use. Someone might want you to write the point, the word accounting. You will write ACC to mean accounting. Someone might want to write the word balance. You're gonna write BAL. Someone might want to write balance carried down, balance bar CD C/D, bar C/D. Then you're gonna say balance carried down. Someone might also want to write the word balance brought forward. We're gonna write bar B/if balance brought forward. Someone might also want to look to write how the balance brought down bar B/D balance brought down. We shall see how are they differed accordingly in our future learning process. And you may have another one if maybe you want to write the word account. You write bar A/C, you're gonna say account. Someone might want to write the word debit, DR, you're gonna say debit. The side of account, remember, and we shall see in our future learning process where these are sides of accounts. Not only this, but also another one like CR to mean credit. When you find this, you are saying these are accounting basic abbreviation on which we shall see in our normal sessions. I really thank you about this session, today's session. It was talking about the introduction to accounting, on which we have seen some 5 elements which are different, where we saw the definition of accounting, objective, importance, the users, and its abbreviation. Therefore, thank you. I would like to just invite you next session. It will talk about the journal entry, where we shall see the different records. You are welcome at Professional Trainers Academy, a school that trains private candidate school in the secondary school. Here we shall see different session of any trade according as they were professional. Thank you, you are professional. This is teacher Protégène Hagenimana, your teacher, your mentor. Thank you.